Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Mondays are always a fun day around TRI. We have our CTO Sjord come in and talk to us a little bit about site development, some really nifty tools, and I've never seen any other sites be able to do this. But he's building screening tools where you can combine weekly signals and daily signals in the same screener. Never seen that before, so always a treat whenever you come into TRI and you see what's going on here. I told him, and I told everybody in the broadcast, and he was kind of blushing a little bit. But Sjord's building the next generation of stock analysis software here, this platform. So, I mean, it's like next level, and it's beautiful because it's like an idea that I had in my brain like 20, 30 years ago about combining technical tools to give you signals over multiple time frames, and being able to actually bring it into reality in a professional, up-to-date coding world format. It's a real treat, so you're actually seeing it come to fruition as we speak here. It's beautiful. Also, too, just even off of these free videos, when I give you this look, you hopefully now, if you're watching this long enough, you can see that this information actually telegraphs the market nicely. So we were squawking about a good month, or actually about a month and a half ago, about problems that were developing in the interest rate market. And it was fascinating when I was bearish of the interest rate market. The really popular sort of talking heads were the bond king, and they would laugh at me. I'm the bond king. How dare you say that I'm not correct? And I'm like, well, look at the data. I mean, the breadth of the market's collapsing. And sure enough, that was right. I mean, just follow the data. So what usually happens in the market is at some point, and usually it's interest rates that kill bull markets, but at some point the stock market and all the risk takers of the world look over at the interest rate market and go, oh, geez, you mean the cost of money has gone up quite a bit? Maybe I ought to rethink this risk approach. And they start selling off, right? Selling off. And I do like the idea that crypto is actually a really interesting leading indicator here. Selling off the big industrial stocks, selling off even commodities are coming off here. And actually, this is fascinating as well. Great application of the information. Whenever we see our breadth of the market get above 70, 80, that's overbought, right? You can see how the utilities, that's a bond proxy technically. They get up into this area and look out. We don't actually have the data on the screen for the bonds there. So interesting to see that the commodities were starting to get up in nosebleed, and we're starting to get some flash sell signals here. And we'll look at the crude oil. We had mused with you last week that we might be forming an empire top. Dun, 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 dun. And I actually went into an old prop firm and I posted that in their lounge, and they're and I think some of the more mature traders knew what I was talking about. Others were kind of like, what the hell is he going off about? Said, looks like we've got a Star Wars theme song developing in crude oil. Sectors starting to roll over. And I like this because we basically follow the world. You can see basically European stocks are breaking. S&P 500 having a bit of trouble. Interesting how Australia is acting as a bit of a leading indicator. And also, too, that might be a great proxy because I think Asia really is more the leading indicator here now. And, to a certain degree, a lot of crypto now is in Asia. Anyway, long and short of it here, breadth measures, generally speaking, are looking a little bit bearish, a little bit heavy. With the slight smatterings, notice actually Australia's trying to cross back bullish here. And the bonds actually are signaling that, hey, you know what, maybe we're done our fireworks. I think I've told you, too, that I like the idea through this fundamental event, the big stimulus package spending program down in the United States, that the bond market was really worried about this sort of wage price inflation that could potentially be coming down the pike. And that's the quote unquote inflation that these Fed governors, when they talk, oh, is inflation here, isn't it? That's what they're really worried about, and that's what they don't want to see. So I think to a certain degree, the bond market actually was a little happier on the passage of that stimulus without the minimum wage increase and without talk of, we have to pay the workers more money, which means prices to offset those rising wages have to go up, and then the workers demand more money, and then rising prices, and then more wages, and then et cetera, et cetera, et cetera. So we'll see how that debate goes. I mean, hell, governments at any time can come in and change minimum wages, but I get the feeling that the real push, the real danger of that happening, I think, is abated now. So, also, too, I don't know whether I really want to get too bearish on these risk proxies, because with that stimulus package, the most important thing there is that the U.S. Federal Reserve will just simply go and gobble up that debt instantly, and then use that debt as lending collateral, and they'll lend out 80, 90 cents on the dollar against those debt instruments. So the Fed basically, and I think it's probably better part of $1 trillion in that package that's earmarked to that. In essence, that means the Fed's got a good, $10 trillion of firepower. If somebody says, you know what, we're going to really test you and test your resolve, they might just come in and fire off bazookas, which is what their expression they used last March. And I like that because, in essence, that's a colorful description of the Fed coming in and saying, look, you want to sell, we'll buy anything and everything. And boom, instantly the market just jumps higher. The Fed bazooka. So with that huge war chest, and then, a week or so ago, Powell said, look, I'm ready to fire bazookas any moment. But the legislators got to pass that stimulus package. So I think that's kind of in the final phases. And I don't know whether it's a good idea to fight the Fed in here. Powell said he's going to support price. So that, to me, says that don't expect the stock market to crash. And if selling does start getting going in earnest, like I said, don't be surprised if a bazooka goes off here or there. Market, interesting. U.S. dollar still enjoying that counter-trend rally that we saw late last week. And again, I think it's kind of predicated on if they had passed the minimum wage stuff, then that would have probably been problematic. But since that's not, it's probably just business as usual. Special interests get funded, and you know how the story goes. Kevin was even telling me before we got this recording going that it's very hard to find somebody who's not both expecting quote-unquote inflation and actually spending their money in the marketplace. They don't really, people don't come out and say, yes, I'm expecting inflation, unless they actually have some money on the line. The boat, that inflation boat, it is heavily tilted to one side of the trade right now. It scares me, because I hate to tell you, but if this damn U.S. dollar breaks through this high here, that is a big honking weekly W. And if it's one thing that you've learned from watching this damn channel, something about W's in the marketplace. And usually when the U.S. dollar is rallying, that is deflationary, not inflationary. So I got a funny feeling a big chunk of the world is caught on the wrong side of the trade here. They're going to get their fucking asses kicked here. But so what? I'm on the right side of the trade. In my eyes. I'm sure there are lots of people going to go, yeah, you think so, Brian. But I like the long side of the U.S. dollar trade. And I really don't like the long side of the commodity side of the trade. So I'm not necessarily short commodities, especially, considering they're so volatile. But I'll tell you, the crude oil today, you don't see these kind of chart patterns every day. This is what's called an empire top. where over these 3 days, and even 2 today, that surprised me a little because we already know that the stimulus stuff's coming. We already know, okay, fine, maybe this was, maybe it's not going to come, whatever. But you can see lots of wild price action. They tried to take the market back up into this topping zone. It was violently rejected, and we went through the neckline of this fractal. So that's, as technicians go, that starts to speak some serious volumes in here. Now, I suppose today, that low right there, if we go through that low tomorrow, that carves out a 5-bar fractal, which is even more bearish. Right now, I would still say we have this is kind of like a professional trader's trade, this empire formation. Very difficult for new people to consider taking that trade. You got a short there, and you got a risk to a break of the highs. And you can see halfway through the trade, and then it comes back down. Hey, look, I was right after all. So we'll see how that goes. But, if you're a risk taker in the marketplace and you see energy prices, energy demand coming off and breaking down, that's not necessarily the most bullish sign. And of course, remember, we've talked to you guys about this before. This is all coming in at sort of a technically appropriate level to see weakness come in, right up against previous highs, trend lines, fib levels, A, B, C, D objectives, and now we got a big fucking empire top. So, everybody in the public's clamoring about inflation. Everybody's long these things and expecting more higher prices. I think the perfect trap has been laid here. Like I said, the issue for a guy like me is, has the actual stimulus passage passed the Senate? So I don't know whether that's happened yet. And then secondly, does the Fed even give a shit about this market? The market that they're going to be focused in on, of course, is the bond market. And, this was the 1-year anniversary of the blow-off top. Remember, he said we were going to keep an eye on this to see how it goes. You can see how our little gold forecast seems to be moving along that way. So, there's some sort of pivot. And I would imagine if these bonds really puke out here, that's the Fed bazooka that you want to be watching for, where the Fed comes in and, basically says, this is it, no more down, you go up. I'll tell you, though, you can see this just simple, trend range, and that same range expressed to the downside. This is very normal price action. It's not really out of the ordinary. And you can see, actually, look at that. It's all the way down there. I mean, is there some sort of colossal puke out here? I don't know. I mean, there might be. Certainly nothing for a guy like me to do. And, of course, remember, I've been sort of humming and hawing bearish, since up here. So coming and thinking about being bearish right here, you're kind of like middle of the road. My hunch, probably like the gold, right, is this is probably the ultimate end destination down there, but it probably does something like a Fed bazooka. All right, bring the market back, and kind of like what we were showing here, and then we have our final dump into those lows, something like that. In fact, we could probably put a trend channel on there too, right? We'll go boo, snoo, and coo. There you go. Do-do-do-do, boo-bee-do-boo-do. Actually, interesting. Look at that. So that's the midpoint of that trend channel right there. And there is the bottom of that sort of continuation, 200%. And that's right there. So it almost looks to me like we're just going to be bounding within this sort of top of the channel and then midpoint of the channel. Actually, I like that thinking. So there you go, folks. I do like the idea of some sort of short-term pivot here. But this could get kind of ugly here still over the next couple weeks. And, of course, the good old gold. I think, did it make a new low here this morning? Haven't made a new low here this morning. We could, have a clothesline low, of course, which wouldn't be great. For the bulls. And, of course, lower highs and lower lows. Awfully tough to justify being a buyer just yet. Probably best to wait for some sort of W type action. And you come in on the buy side here. You're basically trying to catch a falling knife. I mean, this might be the bottom or it might be all the way down here. You just don't know. And how ironic, right? The whole fucking world is all tilted towards inflation. And yet this thing is clearly screaming deflation. Fascinating. Oh well. Crazy market. What can you do? So, risk off is certainly coming off. Risk on. Interesting, in the crude oil market, risk on is even coming off. The stocks are trying desperately. Mind you, they don't really have a hell of a lot of news to drive this, but they're trying desperately to break this top. Remember we talked about that 5-bar fractal. Does that start to form on the crude? If it does, then I doubt this thing can actually recapture these highs. And I found this fascinating because on I think it was Friday, might have been Thursday. Yeah, it was Friday. We had Kiran come on the call, and he did just an awesome presentation. Really, just so professional. And it's great to see professionals. It's great to see professionals talk levels. I mean, it's so cool because you can go, yeah, that makes sense. Yep, that makes sense. And he was saying there's just a brick wall of supply up in this wick up here and this wick up in here against this original structure or fail level. And like on Thursday, Friday, when we were sort of talking and reviewing, and Friday, it was kind of like you don't really want to come in on the sell side here because all the volume profile levels, all the GAN levels, moving averages, they are all clustered all up in this area here. And lo and behold, look what happened here. And if we go down to like an hourly chart, you can kind of see it a little better, eh? So, there is that original fractal top up there. That's that doji up there. And supply, 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 supply. What do you think the odds are these sons of bitches are going to bring this thing up? This is a liquidity pool to them. Just as this was, and this is, and this is, and this is. What do you think the odds are? We come up, boop, run all those stops, and then roll over. Fading the top. That's kind of the kind of market that I think we're in. And I would imagine at some point the stock market's going to look over at that crude oil market, energy, and go, whoa, what the hell's going on there? I was a little surprised to see that here today. Now, you might see the exact opposite happen. I mean, you never know. I mean, there really aren't any trades here. Like, this would be a trade location. And then I want to look at my indicators. Do I have divergence? Then do I have an M or maybe an empire or whatever to actually frame the risk on the trade? So that's what the trade setup would be. This right now is just, we're just talking levels. Nothing really to do at that particular level right there. And also, too, that's probably the same kind of conversation as the corn. Like I said, the one market that really surprised me that's just, it's not acting the way that risk on should act if risk is on, is this crude oil market. You can kind of see this looks very problematic. Something is not right here, Will Robinson. Right? So it kind of goes, you can kind of see the head and shoulders. And you can see there was a hell of a fight here, right? You can see there was a green bar in there, huge tail. There was a pretty big fight. And then we just puked out here. So at the very least, you got to let this sort of form some sort of bottom. Then, maybe wait for trend lines to be broken and then W's on other sides of trend lines, that kind of thing. But totally trying to catch falling knife stuff in here. Yeah, I know lots of pro traders back in my prop days that would do exactly that, but definitely not for the faint of heart, and definitely not the mom and pop trend follower saving for your retirement plan kind of thing. So you can see the original market structure here. You can see good old Mountain Man and gee whiz, like doink, and then back off. So, but having said that, gee whiz, that's an awfully big M. That's nasty looking. So, risk on and that inflation bugaboo. That's totally got the market's attention right now. Actually, I think that's an old story, not a new story. So with that kind of image, awfully tough for me to get too bullish in the stock market or the risk market right now. And just sort of still in cool your jets kind of mode. If anything, the irony of it all is that, I'm sitting on quite a bit of cash. I'm actually starting to seriously, I don't know whether I really want to step in here, but, maybe if we did a scenario like down, up, I might actually even think about starting to actually put some money into interest-bearing vehicles if they're high enough yielding. I mean, up here, they're yielding nothing. It was like 0.5%. It's like a waste of time. So, but that's a million miles away. There's nothing to do there. We might find a situation where all assets actually come off here in unison. And then that might be like, okay, Fed's got to step in and fire a bazooka. I did notice in our conversation with the crew here today that the junior stocks they're actually looking a little better than the senior stocks. Not rip-roaring, banging out doubles, anything like that. What I noticed, a lot of stocks that I did bang out doubles on this kind of push up through here, they all pulled back violently. And now they're all just sort of like, okay, well, what are we going to do? What are we going to do? What are we going to do? And you can see, I mean, this is the Russell 2000 versus the Dow. If this thing starts Wing out, we start breaking trend lines, we might start the orgy all over again. And, of course, all you DeFi kids, you want to see this thing rip-roaring. That's, in essence, it's the same thing as the altcoins are like Bitcoin dominance kind of conversation. It's exactly the same thing, just a different market. So for the time being, a nice update, inside bar reversal, so that's good. But probably a little too early to get super bullish. There's your trend line. We got the trend line break. Awesome. Now can I get a W on the other side of the trend line? So that's sort of what I see there. And then, of course, over in the corn, I was actually quite surprised. Well, I don't know whether surprised is the right word. What's the right word? A little disappointed, to be honest with you. I try to come to you guys with a fairly level-headed approach to the market. And you see, I got like 100 views a day. Some fucking clown yesterday is putting out YouTube videos, hundreds of thousands of followers. And he's like, the headline of his video, Bitcoin commentary is, "This is urgent! This is urgent! It's crisis! This is urgent!" And the whole fucking video, the guy, it's like he's on fucking speed or something. Just relax. Take a deep breath and just talk. But no, it's got to be this fucking just over the top. Oh, this is urgent. It's crisis. You have to act now. You have to click my referral button and pay me to join one of these cryptocurrencies and spend your money. It's people like that why the financial services industry comes and shits on people in the brokerage industry that did exactly the same thing, eons ago, and they put rules in place. You are not allowed to promote like that. You don't hear people in society doing that with stocks. I mean, you have some crackhead guys, I suppose. But to all intents and purposes, they do sort of, even some of the guys that don't even know what the hell they're doing. They do say, well, this isn't financial advice and, just, go slowly to a certain degree. But very disappointed in the crypto space. There's a couple characters that are just they act irresponsibly, and it's just blatant shill. And you can just see, I've been at this game 30 years. I've been through this at least 4 or 5 times. I know that at the end of this, there's gonna be heartbreak there. It's a shame. Is this a crisis? Is this an urgent? Not really. I mean, on a percentage basis, just overnight, the corn's moved about, I don't know, maybe 10, 15%. I mean, trust me, on a volatile asset like this, 10% movement, that's peanuts. So don't kid yourself. I mean, it's not like we're starting some sort of new fucking bull market here. Jesus Christ. What I see here is a trading range. We had some colorful characters on the site that have come up with affectionate names for these pullback zones, and I like it. I think it makes sense. But call a spade, right? Oh, we had it on this one of these charts. Where is it? Actually, I think maybe it was over here. Man, I like W's, letters of the alphabet. Like, this is the kind of stuff you should be concentrating on. Not stuff that's trading at the top end of its range. But that's another conversation for another day. Actually, maybe not. You know, like we're talking Bitcoin and altcoins. I mean, like if I was shopping in the marketplace, I'd much rather go and buy something that looks like that versus something that looks like that. I mean, it's really just that simple. You know, another, you know, sort of illustration of ranges. Oops, I wanted this one. I think I put this out like on weekly videos and stuff, like broiler chickens and stuff. You know, the internal momentum is pretty nasty here right now. That doesn't necessarily mean the bull's done, but it does mean that if you are a bull, maybe just temper your enthusiasm. And it did feel, especially with the potential of that legislation down in the States being passed, it did feel like maybe this was too one-directional. And anybody who just sort of, you know, like wants to maybe trade back and forth on this thing on even just like a lower time frame, keep in mind, this is, what is that? That's like, geez, like 14, 15, more than that. $16,000? Jesus H. Christ, this thing volatile. Could you have seen some sort of swing off of the lows here back up into probably areas where professionals might actually step up and short this thing? I think so. You know, we did have some interesting internal momentum indicators that turned back up here. But interesting for a guy like me, actually. The momentum indicators have turned back up. But there really isn't a trade set up for a guy like me out of this because, you know, what you might find, right, we would call this a dead cat bounce, boing. What you might find here, so be careful, folks, is we go up. Remember, I like, you know, ideally I like to have 3 lows to work with. But we could very easily go up and then come right back down and make a new low here. That can happen any old time. So, I mean, I suppose if you're really slick, there might have been like maybe like a 1 hour entry down in here. But, oh man, that was tough. It's not really a trade per se for me here. This would have been pretty light on your toes. Because this market went down to new lows on that candle. Then it came back the following candle, and of course that confirms all these divergences. Now, how the hell do you get into this thing? And I don't know whether I would have actually had an entry there. That's a tough one. Be interesting to see. I mean, if you were like really slick, maybe you could have said that is a double bottom. But if you do, then really that means you're trading all the way down to like sort of 15-minute charts. There it is there. And if that's the case, okay, fine, bull dip, but you can see running. Oh, what the fuck? These are bear divergences now coming in here. So, you know, just like our rule about divergences I showed you on the daily chart, same sort of thing. If you took that trade, and congratulations, kick-ass trade. Damn difficult. You're operating off a very low time frame. You better respect the messages that are coming in here. Like I said, because that is a V bottom off that higher time frame, be careful. We could very easily come right back down and test that low. And for me, because I'm chicken shit and I'm lazy and all that kind of fun stuff, for me, I actually need to see a W come in here. That would actually frame an entry for me. right? And we get a nice little reload zone. And I get some anecdotal evidence that, hey, at least I've got some sort of floor to work with here. So if there is a trade here, and I'm not even saying I even think there is, but if there is, it's going to develop something like this. And it's interesting too. I like this idea because I do like that push back up top into that reload zone up top there. And they say, and if you don't know this, it might be a good idea to write this down. Usually markets like to put in their weekly pivots through that Tuesday, Wednesday London kill zone, which is about midnight my time, which would make sense. You know, that's sort of over the next couple days. So just be careful here. I like, you know, the momentum signals are trying to say, hey, maybe the down is done. We see where institutions would ideally like to short this. It's just coming in here. And even off of this just straight line move up, man, this is dangerous. So be careful, folks. Having said that, like I said, probably buy windows for your reference would be in there. And sell shorting window references would be in there. So what is that? 50, we'll call it 55. Nice round number. And we'll call this 45. That makes sense. 45 to 55. That's probably your trading range for the next little while. It's interesting, again, you know, that sort of conversation about Colin and his pump chaser zone. It's not a bad idea if you are like, oh my God, this is a rip-roaring trend. I want to try and get in. Just wait for those 38.2 retracements because they almost always have to happen, and they usually just burn the kids that come in late. You know, as this thing's moving higher, you see momentum is waning. Willie is stupid. Just cool your bloody jets. Wait for that 38.2. Okay, now let's start thinking about it. That's off to the pros that came in and basically, you know, we always say look left. So where the hell is the last time we actually had serious low? There's one, then all the way there, then there, and then we had one there. So you can see they came down into this level. Nope, still more selling. So where are they going to stop next? Oh, they're coming into this level. Oh, still more selling. But notice they just couldn't bust through 38.2 or that low. So, you know, hats off to anybody who had the balls to step in off 38.2. It's probably a good idea, that pump chaser zone. Don't chase. Just let this thing hit that 38.2. Then you can start taking your shots. Is it a trade I would do? No. Maybe, you know, if I was forced Gundy or had day trader kind of thing. You can see the bullish divergences all started to develop through here. Maybe you take that W following the confirmation of this divergence here, and that sets up that trade. Same thing as we said about the corn, though. Look at what's happening now. Higher highs on momentum here. No higher highs on momentum here. A little bit problematic. Also notice, you know, through here, getting long. You know, Willie is trying to W. We're not stupid. By the time you get to here, this area here, you've missed the trade. It's over. Sure enough, Willie had to clean up. Nice consolidation. I suppose if you really wanted to try and get in on a trade, there was an entry there. But again, now we're up here. No trade. Willie's stupid. Willie is cleaning up, so that's good. But, you know, we got a big message here on this divergence. Maybe let this stuff clean itself up, form some sort of bottom, W, maybe even a bull divergence. Why not? And then we can think about more up. But right here, no, dangerous. And this is like lower time frame. Right? Most of you YouTubers, you got no business even looking at that. You higher time frame people, I think you're probably best to think something along these lines. There's no hurry here, folks. I think, if anything, at best, we've got this wild trading range. Like I said, you know, corn 45 to 55. It looks like good old Ethereum looks like 1250 with big fat round number, all the way up to what does that say? 2 Gs. Yeah, so basically 1250 up to 2 Gs. That's a nice trading range. What I do like, and I've seen this happen many years. How are we up to 4 viewers now, Kevin? How does that work? Somebody over there is watching, and you know you're not supposed to be watching this. All of a sudden, it's going to boop down to 3, boop down to 2. Anyway, it's kind of funny. I mean, this is supposed to be private, and then we publish it. Just in case I say, shit, fuck, boobs, shit, fuck, boobs. So then Kevin can edit that out, but I don't think he's going to edit that out today. Oh, Brian, you crazy nut. Okay, where was I? Trading range, which I think actually opens up a window. Trading range on the corn, trading range on things like Ethereum. I think it opens up the opportunity for funny little things like that little PEI I was telling you about, or PIE. Let's see, do I have that chart? Where is it? Oh, geez, how many chart versions did I do? Anyway, it's almost, maybe I'll just, actually, probably just like one more click. Hey, there it is there. You know, like that's the kind of shit I want to invest in. I mean, look at that chart. That's ridiculous. This, what is it? 0.00012. Could this thing be 0.001? Yeah, sure. That's 10x from these levels. They always say wicks and tails like to be eaten. Really, I don't see a problem why this thing can't trade right back up to that candle body high right up there. I'm not saying that's going to happen. And of course, you know, I'm just telling you what I'm doing with my money. You buy whatever you want to buy. Not financial advice. You know how the story goes. I mean, do you want to maybe just work a bid in this big old gap? That's up to you. Do you want to just buy this W? That's up to you. I don't know. But I mean, Jesus, look at that chart. So if there's places I want to put money to work in the marketplace, it's like this. Can I get a double for it to go to 0.0002? I guess 0.00024 or 0.00025 to give me my double here? Well, that's just to move to there. Is that realistic to generate a risk-free position for the rest of my life? Cost basis is zero, ownership for the rest of your life on this asset. All I need is, I'll just buy it here now, and I just need that yellow line tagged. Is that in the realm of realistic possibilities? So that's the way that I approach the market. I'll leave the presentation at that. I don't care whether you buy or sell this. It's no skin off my back. But those are the kind of opportunities that I think this market is presenting us right now, and I'm trying to take advantage. All right, I think I'll leave the rant at that. Have yourself a wonderful rest of your trading day. Try not to get it. Jesus, anybody who starts a video fucking 100 miles an hour, high octane, with like a headline of urgent, turn that shit off. What a waste of time. Because one of the times he's going to come to you and go, urgent, you got to buy. And then the thing's going to fucking collapse and he's going to have lawsuits right, left, and center. I can see it coming. The only question with this international YouTube thing is there actually accountability for these people? You know, did the BitConnect guy, did anybody actually hold him to account for all of that? I don't know. But I'll tell you, the kind of spiel that I'm seeing on YouTube, I would really like these people to be held to account down the road, because it's just blatant shill, and I don't see value in it, and I think it's just going after the easy, low-hanging, emotionally vulnerable investor out there that I'm trying to help. Oh well. Take it easy, everybody. Have yourselves a great rest of your day. All the best, and bye for now.